Good morning all, hope you're doing well. We'll quickly look at the calendar, we'll look at the sentiment and we'll look at the bubbles. And it looks like we're going to probably be a bit risk off today looking at the sentiment on the indices. Okay, so because of that, look for a flight to safety in the dollar and probably sell Aussie New Zealand dollar, but we have to see what the bubbles look like and see if we can get some setups. So basically we've got jobless claims, and tomorrow we've got the retail sales from the UK and the consumer sentiment. So fairly quiet today, tomorrow, which is nice. And then of course next week we have the NFP on Friday, but we've got some stuff to talk about before then. Looks like Wednesday is very, very busy. Okay, so let's look at the bubbles. And we are in a state of fear today, and the crowd aren't that long. 5 bulls versus 1 bear, so that's a bit crazy. That ratio is inverted. We normally should be seeing more bears than bulls. Now currently that's opposite what's happening right now. So let's look at the bubbles. We actually have updated data. Yeah, that's fine, that's good. 5 minutes old data, that's good. 8.14, 8.19. Strong dollar, weak New Zealand dollar. So we can perhaps come up to the trade station, trading view even. And we had a Kiwi USD trade from Tuesday. So let's have a look. So this should be falling according to the bubbles. And we know we'll risk off looking at the spreadsheet. Okay, so we would have taken profit on that. That was a good trade. Although I say that we didn't get filled. Yeah, see that's that was the entry. That was before this trade idea put out before this wick, and we basically came what's that, 60 less than 3 pips to getting filled. So that was kind of annoying. We could have brought that entry down ever so slightly, and we would have had a good trade there. But it's fine, we didn't get filled on that. So currently, we are looking quite bearish because we're breaking this demand, but we have this one below. So it's possible we may come down to that one for a dip and back down. So what we could do, perhaps what we might do, it's going to be tricky because we're going to come into that. Let's draw a box. This is the trouble. Right, we're going to come into this. It's going to be like a bounce. So that's that was annoying. So yeah, we're going to come into that for a bounce, even though the bubbles are saying sell. We actually have had quite a bearish move since the FX Open. So probably up and then down, and then we want to get a break of that. So I think what we need to do is do something like this. Have an entry. It might be a case of doing this and then having a stop here, a very wide stop at the old demand. Could probably go for maybe a 1R on it. It's not very good, but maybe something like this. I'm not sure. We will probably need to come back to this tomorrow because we should be bouncing, or something like this maybe, where we're using that one there, this zone for that. That could be a lot better. It's a much better risk to reward, something like that anyway. So we know that we've got a strong dollar, we've got a weak New Zealand dollar. So we should continue to fall, but we do have this support down here. You can see we're reacting off it quite a bit. So let's look at this is probably an idea that I may take, but we'll probably look at it tomorrow, probably. It's a trouble because when we have a setup, we have to remember the technicals. And obviously there's a lot of buying activity here. And we also had a big bounce there as well. So this is going to be a fairly respectable area for longs. And we have to also remember that we probably might have taken some stops out as well. This moves fairly bearish, so we could have hit the SLC out. If we take out retail liquidity, we may bounce because we remember when we've moved a great deal on the bubble, we can take stops out in that process. Okay, so we'll have to wait and see how that goes. Let's look at the indices. And the DAX, well, the thing is they've gone long, so we have to draw a box above. So we have to draw this here. All right, so we should be below that, and we are, and it's fine because they can't be getting paid. They've got to get punished, so that's fine. Right, they're going long, so we should be below this box. It's basically on that line, isn't it? So we should be below that. And we have to remember the overarching message is that we're in this chop. And that's that Trump pump from the negotiations and speech marks that never actually happened. So we should be, this is real, that's legit. That we should be below that box, and we are. S&P sideways and just ridiculous. So down, up, down, up, down, up, down, up, down, up, down. It's very sideways, so no signal there, and we're still in that horrible zone. And gold is that they've shorted it, and we're seeing price fall. So currently they're getting slightly paid on that move. It leads me to think that this is probably going to be moving from the US yields rather than the retail sentiment. So while it's very powerful, this aside, gold does have its own whims and reasons. It's not just purely sentiment, where it is really good for the indices. And that's the video today. And then we'll have to have a look at that New Zealand dollar USD maybe tomorrow. Whether or not we get up there, probably not. But we might have a risk on pump. We might have a news bite from the United States, and we may rally. And then we can probably potentially sell it to get a 2.74R. But at the moment, we've got this support. We may break it. We may break it. And we'll just have to wait and see. So trade safely, and I'll speak to you guys soon.